Hi, and welcome to Your Prosperity, a podcast series on financial topics including tax, wealth creation, superannuation, lending, audit, and many other things that we deal with here on a regular basis at Prosperity Advisors. As with all financial podcasts, any advice you hear in this is general in nature and not to be relied upon. Please contact us for any specific advice. Hi, and welcome to the podcast. Today is the 27th of March, 2024. I'm Brendan Campbell. I'm here with Aidan Vuocolo, one of our managers here at Prosperity. And we're going to talk to you about something quite timely, FBT. For those who don't know, FBT stands for Fringe Benefits Tax. It's timely because it doesn't work on a July to June year like the income tax does. It works from April through to 31 March. And as it's the 27th, it is very timely. So, Aidan, thanks for joining us.
Thanks, Brendan. Great to be here.
FBT, I guess you and I deal with this on an everyday basis, but small business may not deal with it as regularly as we do. I'd probably only look at it once a year, in fairness. So I thought probably just a bit of a rough overview for everyone. FBT came around the 80s. It came about because businesses were providing some sort of benefit that wasn't through wages to staff, which was a good way to attract staff, and staff loved it because they might get a car and they get to drive the car privately, and businesses get this tax deduction. Employees are getting it. They're not paying tax on the income they're getting or the benefit they're getting from it. Government thought this was a bit of a loophole, so they brought in a thing called FBT, Fringe Benefits Tax. So effectively, if you're receiving a benefit that's not provided to you through the wages system where you pay income tax on it, it's a fringe benefit that you're referring to, and they cleverly named it Fringe Benefit Tax. Then you're receiving this benefit, and this is a way of effectively taxing the employer. So you pay fringe benefits tax on it as the employer, not the employee. They get it as a reportable fringe benefit, and it might affect some, certain thresholds for their income, but in reality, they don't pay tax on it. A couple of big things happening in it. Aidan, I think we chatted beforehand. We'll keep it to the simpler stuff for small business. Is that where we're thinking for this one?
Yeah, we'll keep it to the main areas that small businesses might run into FBT or might consider providing some sort of benefits to their employees. So we'll touch on, I'll talk more about car fringe benefits. We'll touch on entertainment or parties and sort of where that falls in line. It's a bit of a grey area, but there's definitely some ways around it. And also talk about, how to incentivize employees that might not be a bonus, but potentially having deductible gift card as well provided to them.
Which we see a fair bit of, and cars are a bit of a pet topic of mine. I love talking about EVs and FEVs, so if anyone's heard me rambling on, I'll definitely be chirping in with you on that one. So Aidan, appreciate it. Thanks for doing this with us. So yeah, FBT, car fringe benefits is probably the first one. Where do you what are the rules? How does it work? And when should employers be thinking about it more?
Yeah, of course. So really, car fringe benefits can be a great way to motivate or retain employees, a good way to attract them into the business, and can be structured in such a way where the employee uses their pre-tax dollars, gets a car, might be able to use it, can potentially use it 100% private use, depending on the vehicle and depending on the contribution back to the employer. It can be a benefit for employees using their pre-tax dollars to be able to use the car and can save some money in the process.
And I guess if there's I know the answer to this, but just to lead into it, if there's FBT payable on it and you're just salary sacrificing a car and it's 100% private use, the employer sounds like would just pay tax on that effectively at the top rate through FBT, but I guess there's some concessions there that do make it attractive. Do you want to talk us through the 20% stat method, for example, which is obviously the one that one of the ones that makes it more attractive for us?
Yep. So there's two ways of calculating the FBT payable. There's the stat or statutory method, which is just a flat 20% of the vehicle cost. Otherwise, there's the logbook method. So depending on, you might have an employee, they might use the vehicle for work. Most of the time, encourage those employees to keep a logbook. Generally, we find if it's more than 40% business or work-related use, that's generally the preferred method. You do need to keep the logbook over a 12-week period, recording odometer readings and the purpose of the trip.
And the benefit, I was going to say the benefit of that too, I guess, if you've got an employee who uses it a fair amount for work, provided through the business. You claim the deduction, you claim the GST. If they just chip in the amount we calculate, as you said, in pre-tax dollars, or pre and post-tax dollars, but probably post-tax for any private use, then yeah, it takes it off the FBT. You don't have to pay FBT, and really they're just picking up a bit of private use for a vehicle, and it saves them buying a separate vehicle. They're getting a work car, most of the time used for work, and pay a bit of private use, and yeah, it makes it a bit easier for everyone.
It does. It's an incentive for both the employer and the employee. Both benefit through that employee contribution method. And that might be as simple as employees paying for their own fuel during the year and then keeping a bit of a record of what they pay for versus what the business chips in and pays for in the process. Otherwise, you've got the logbook method, you've got the statutory method, which is that flat 20%. Easier to calculate. Employee can use the vehicle 100% of private use, so no work-related component, and similar sort of calculation at the end of the day. So there'll be. And
I probably like that one too when it's used privately a fair bit, because the 20% is 20% of the value of the car when it was purchased. So it's kind of example I always use. I guess it's a $50,000 car. If the employee contributes out of their wages $10,000 towards that, well, that's your 20% covered. The rest of it can effectively be claimed by the business, which would include depreciation on the car, interest on the car. You've got the running costs and quite a few expenses, I guess, going through there. And if we're putting those through as deductions, if the employee can then effectively contribute 20% of it in post-tax, but the rest of it in pre-tax. So even if they're salary sacrificing their car for their own private use, hey, isn't it pretty cool if they can put 7 or 8 grand pre-tax dollars towards it and 10 grand, say, in post-tax? They're still going to be pretty well off. If they had to provide that car themselves, they wouldn't have got any of it in pre-tax. So it can absolutely be a significant saving in doing that.
Yeah, definitely. And for your employees on those higher tax brackets, it's almost a no-brainer to be able to provide that. You might have an employee looking to upgrade their vehicle. Can be a timely time to go, okay, what about offering it as a bit of a salary package?
Speaking of no-brainers, what if they got an EV or a FEV?
Yep. So the federal government, in a bid to sort of accelerate the on-take or uptake of electric and plug-in hybrids, they introduced an FBT concession from 1 July 2022. The vehicle does need to be purchased. If it's a new vehicle, obviously after this date, and if it's a used vehicle, the original purchase must be after 1 July 2022. So important to get the timing right of these vehicles. But the benefit is the running costs, and we talked about the two methods, the statutory method and the operating or logbook method. With an electric vehicle or plug-in hybrid electric vehicle, there's no FBT payable. So you can have an employee, and once again, subject to limits, so subject to a cost limit as well, which is at the moment about that $89,000 mark. You can provide a $85,000 Tesla to an employee, new vehicle. They can use the vehicle 100% private use, so there's no work-related component, and then there's no FBT for the company to pay. There's no employee contributions for the employee to contribute, so they can get a better sort of overall. The employee will take more money at the end of the day in their own pocket.
There's no need for the employer to contribute, but if you wanted to, you could run it through their payroll. At least it'd be 100% in pre-tax dollars, which effectively means a tax deduction. So if the business wears that, that's great if you're providing it as a benefit to your staff. But if they wanted a salary sacrifice as well, they could take a bit of a cut in their wage and put it through as a salary sacrifice arrangement and pay for the whole thing in pre-tax dollars as well. So huge upside in that. As with everything, love it. That's a great one. But as with everything, a couple of caveats just to make sure, guys, if it's a FEV, I think you've got to have possession of it before the April 2025, I think it is. And you've got to be under that luxury car tax limit. It's got to be originally purchased after July 22, as you said. So little things to get right, but essentially a FEV or a plug-in hybrid or an EV, you can really get through the business provided to an employee, and it's effectively tax-free. And that might be a small business owner providing it to themselves if they're an employee, or offering it to staff, or as a bonus to staff. Lots of options. And the bit I love, it's just It's effectively tax-free and no FBT. It is reportable FBT, which counts towards the employee limits when you're looking at some sort of thresholds for them individually. But yeah, really, it's a bit of a no-brainer.
Yeah, definitely a no-brainer, especially when you might have an employee 5 years ago purchased a vehicle, looking to upgrade with more electric vehicles coming onto the market efficiency going up. Definitely worthwhile considering it as a viable option.
Particularly if it's a low business use, like that's just makes it so attractive. I mean, there are some other good ones out there. I guess we're not going to delve into all of these and not going to go into the deep of them, but there's vehicles, I guess, that are commercial vehicles that aren't considered cars. Really important to understand the definition of what a car is, whether it's carrying capacity, number of passengers, those things come into it. So sometimes there's dual cab and single cab utes that come into it, or large transport sort of vehicles that don't actually fit the definition of a car, therefore don't count towards these sort of methods we're talking about, and are taxed slightly differently. So very important to understand the nuances of it. But yeah, definitely electric vehicles, possibly trade vehicles that are used, definitely some concessions there. And even if it's just a regular vehicle under the luxury car tax sort of limits, 20% stat method, simple no-brainer if it's a low business use, and logbook if it's a high business use. I think that's roughly where we're saying, Aidan. Is that about right?
Yeah, they're the key takeaways to consider. Once again, definitely ways to sort of either motivate your current team or, in this tight sort of market to attract talent, definitely ways that you can attract the right people to your business.
Absolutely. So FEVs and EVs, talk to me about that. I'll talk your ear off all day. But let's move on. What else we got? Events, Christmas parties, traditional ones, staff parties. What do we have to be careful of there?
Yep. So I guess Christmas parties is probably a common business expense. A great way to reward your employees. Might be offsite as well. There's a few things to keep in mind to make sure that to make sure that you sort of don't fall foul of the FBT rules, and to make sure that you're not overpaying or paying extra than you intended to in the first place. So the key factor to consider, and that there are a few different ways and I won't go into the detail. The main one to consider is to make sure that you're under that $300 per head cost. That includes both food and drink. So you've got to be careful. It's not both, so it's added together. So as long as you're below that $300 per head for food and drink, and it's infrequently provided. Christmas parties generally are. There might be another party during the year. Our sort of view on and there's no formal definition, but our preferred infrequent is maybe 2-3 times a year. Anything above that may be argued as more frequent than not.
Yeah, absolutely. Yeah, 4 would be frequent, I would have thought, and less than that, you've got a good argument. 1 or 2 is definitely not. It was definitely infrequent, so it's a bit of a tough one. They call it infrequent, but then don't go and define it for us.
The other thing to consider is you might provide an event to both both your clients as well as your team. If that's the case, always good to keep a record of who attended. Are they a client? Are they a team member? Can help to reduce that FBT exposure for you. There are alternative methods than the $300, and you still might be able to get a deduction for it.
Not always good to mix clients and staff, but sometimes it is. What else can we use? I know the other thing we talk a bit about is things like little gifts. When you give a gift to someone, Christmas, end of financial year, whatever it is, often you're giving a little something to staff, and there's some efficient ways to do that.
Yeah, definitely. So, say you don't want to pay a bonus to your employees. If you pay a bonus, then you've got to run it through payroll. The employee gets taxed. You might provide a $500 bonus, but the employee only gets $300 of it. A better way to do it, and it's still deductible for you in the business, and there's no FBT, so it's really a win in lots of regards, is to provide a gift card under $300. So if it's $3.99 or below, we're good. Anything, if it's $300 or more, you fall foul of the FBT rules. So it's always important, to get as close to that mark, but not over. And you can provide that gift card 2-3 times a year.
Again, that infrequent part, yeah.
Yeah, the infrequent, the minor and infrequent exemption can be used as well. So can be a great way to reward your employees without them being stung for tax.
And important to make sure too, that's not considered entertainment. So it can't be a provision of something that's entertainment. It's got to be generic. So, you know, yeah, Coles My gift card, or I don't know if they make them anymore, but you know, your very generic gift card. If it's a specific thing that would be considered entertainment, so a gift card to the footy or something, that would probably be considered entertainment, and therefore wouldn't get that sort of deduction we're after, and would fall foul of what we're trying to achieve. So absolutely a good way to give a bonus, and good for you and good for the staff, because they don't have to pay tax on it. They don't have to worry about it. That's a little something that's nice at Christmas or end of financial year, or both, or whenever it is, or on their birthday, you might give them a gift card or something like that. So they're a good little thing to keep the employees happy, and doesn't cost a lot, but means a lot. And importantly for us, gets tax deductions, and we don't have FBT to consider. So I think that's don't have FBT to be worried about, I should say. So that's always a good one. And all of that is crucial now, I guess, Aidan, because we're 31 March, just about. We're getting close to that. I guess what are the things we should be doing 31 March? Logbooks spring to mind. I guess they make, not logbook, but odometer readings potentially on vehicles.
Yeah, that's probably the key one. There was a bit of a phase in with the 20% statutory method, where there's a different percentage depending on the number of
the age of the vehicle. Yeah,
but yeah, definitely keep odometer readings at the end of March. Encourage you, I guess, to get prepared for the next FBT year if you've got employees that are using a vehicle and you don't have a logbook, but you think you might be over that 40%. I'd encourage employees to get your employees to fill out a logbook over that period.
And even staff should be really completing some sort of document to show the evidence of what they use it for, if we're using percentages and those sort of things. So you normally need staff to sign something there as well. So lots of little things to consider. I guess the key is putting it on your radar. FBT, it's that time of year. Complete all your stuff you need to do at this time of year to get that done, including odometer readings. Consider what benefits you're providing to staff, and while you're looking at it, have a think about what should we do, maybe about little gift cards for rewards for staff, or just sort of not rewards, but around the basis of whether it's Christmas or birthdays or whatever it is. And then, yeah, considering your office parties to make sure they're done efficiently and you're not falling foul of the FBT, as you say. And FEVs and electric vehicles, getting on that train, because that is absolute gold and worth considering for any small business out there. Aidan, any other final thoughts on FBT apart from it's that time of year?
No, I was just to repeat what you said, really. Definitely, there's some great concessions out there, even though the government has closed the loopholes. They haven't, they do allow some exemptions and concessions available as well. So it's just making sure you don't fall foul, and making sure you get the sort of best bang for your buck when providing.
Absolutely. Yeah. Yep. Brilliant.
Wages.
Aidan, thanks for joining us today. Really hope everyone enjoyed the podcast. For more information about Aidan, jump on the show notes and you'll find it there. People can reach out and contact you. For more content, variety of topics we talk about here at Prosperity, whether it be financial planning, tax, leasing arrangements, where we have our own sort of team who can help out with the finance, or even the salary packaging side of things. So we can definitely help out if you need to help salary package one of those EVs for one of your staff members. Reach out and we can assist with that. So there's quite a bit we do here. Jump on the website and have a look through what we can offer. And thanks everyone for joining us. Thanks for joining us for today's podcast. Hopefully you liked it. And if so, please give us a few stars, like and share. And if you'd like to follow the series, please subscribe and pass any information on to your friends as well if you think they might like it. For more information about who we are, head to prosperity.com.au and follow the links.